Hey everyone, it's UB. Let's do a trade review video for my SNX trade from the Haven. This is official trade number 102. I also had another official trade for an SNX long, official trade number 101 in my trade section. I'll be going over both of those. Official trade number 101 was stopped out, so I want to just quickly go over what the thought process was for both of these trades, why I entered even though I was stopped out, and really anything else I feel like I have to talk about in this video. So firstly, I entered my first SNX trade right here. Okay, so this was just purely a continuation play. I entered because this is the highest hourly close that we had after getting rejected in this area twice. So we finally broke out after like 15 hours. So purely a continuation play. Obviously, there's a lot of hype around SNX and DeFi blue chips in general. So obviously, I want to get in on the move. Also, the weekend was approaching. I think I posted this maybe on a Thursday, something like that. And for the last couple of weeks, we had some really nice alt weekends, if you will. So overall, everything was lining up for SNX to go hard. Obviously, that did not happen. My entry was 21.9 to 22.4. So basically, not really long the top, but pretty close. My stop loss was $19. So I'm giving myself plenty of room on SNX in particular because the hourly swings are fairly large, like a 7% swing right there, another 6%. So I didn't really want to have such a tight stop loss just to have really flashy risk to reward. I don't really care about that. I care about where my argument would be invalid. So for this first trade in particular, my stop loss was just below $19. Okay, so the thought process there was we already retested the breakout point here. Perfect retest of the breakout point. So we really shouldn't be retesting that level if we're truly bullish, right? So it was something like this, just below $19, like something like that, and 26.6, right? Something like that. Doesn't really, it's not too flashy in terms of risk to reward, but that was essentially the trade. Obviously, that didn't happen, so I got stopped out there. I had a fairly large spot and a decent sized futures position as well. So it took a hit there. And at that time, I believe, I probably should have checked before I record this video, I believe that Bitcoin was selling off a bit. Same with Ethereum, or it was mainly Ethereum actually that was selling off and Bitcoin was popping up a bit. So yeah, the Ethereum selling off definitely impacted the DeFi space as a whole. So my issue with this trade and why I entered after getting stopped out is because my timing was off. I don't believe that SNX was bearish because it hit my stop loss. I believe my timing in the market was off. And really structurally, SNX didn't look that bad at all after I was stopped out. So I figured, why not give it another shot? I don't want you guys to not enter into the same or a similar position because you were stopped out. Sure, your argument at the time may be invalid, and that would be one thing, and then you'll have to reevaluate things when you do get stopped out and figure, okay, is my timing off, or is this asset now bearish or bullish, whatever type of position you were in, right? So that's the question I asked myself, and I came to the conclusion that SNX is indeed still bullish. My timing was just off, and I came to that conclusion because we really didn't spend too much time below the breakout point here, right? We still bounced off this consolidation block pretty clearly, right? So if we just draw a rectangle there so you can visually see it a little bit better, we very clearly bounced from this area even stronger than how we just broke through it here and then retested it immediately, right? We swept all the lows, so really all of that lower liquidity has now been taken. That's really not my concern, right? We got all of that lower liquidity. Now where is price going to be attracted to? If it's bullish, it's going to go up and it will be more attracted to that upper liquidity. That's just how I think of it. So didn't spend too much time below this area whatsoever. So I looked to re-long after I started to draw this diagonal actually right here. So you could just see the series of higher lows. If you guys have seen these videos before, you know I just draw diagonals just to see, you know, in the future if they actually do play out. I'm really not basing my trade 100% at this time right here on this little diagonal because there's really no validity to it yet. So I look to enter into a long position right here after this hourly candle. So now I'm looking to long there because, as you can see from these two horizontals, this area in general was a real fight for one side to take over or not, right? So when bears finally broke through, they didn't really have too much time for glory, right? It immediately went back to the middle, right? And same with bulls, right? When we finally got a breakout, they were getting swatted down for the last couple attempts, right? So this is really where price is happy, in chopping in this area, okay? Bears are happy here, or sorry, bears are happy here. I guess bulls are happy here, right? Because we are returning to the median where everything is all okay. So price likes to be in this area, and it's a true fight for each side to reclaim this area as support. Okay. So now when I see price break from the support again, I'm thinking, okay, maybe we're going to go down to, you know, $19, retest that again. But we had a very strong buyback candle, and in that buyback candle, we immediately reclaimed this very important horizontal. And we can clearly see buyers are stepping right back in at that horizontal. So that was my signal to get long. Also, now my diagonal is starting to prove a little bit more valid because we had very clear bounces straight from that diagonal here, here, and you can see in the future it bounces off, but obviously I didn't see that at the time. So I entered into a long position there. Really, my invalidation was just another sweep of the, like if we returned even below like $19, I would have cut this. My stop was, I had plenty of room for my stop loss below or just near $18. If we return down there, there's really no reason whatsoever for us to return down for this lower liquidity, right? If we did, I would have said, okay, maybe, you know, $15 would be our target to look to get long again. So anyway, we bounce, you know, attempt to break out here, get swatted down. I could see why people would be a little bit cautious with SNX after both of these failed breakouts, but let's talk about this one first. So this one in particular, right, we have our series of higher lows, reclaim that bottom horizontal, attempt to break out from this other diagonal, right, break out from it, immediately get swatted down. But you have to keep in mind the overall structure of the asset, right? You can't be too zoomed in on the 5 minute and like going back and forth with yourself like, oh my God, this is clearly a distribution top. Okay, now we're just chopping around. Clearly, like, this is just going to roll over. You really have to zoom out, take a deep breath, and realize what the overall structure is. Let's look at the hourly. Was the structure affected by this sell-off whatsoever? No, the structure was not affected whatsoever by this sell-off because our series of higher lows is still holding. We haven't even retested our bottom horizontal, which is basically our entry point. So there's really no need for panic. Same thing with this attempt at a breakout candle right here. We engulf the last, like, what is that? Like 12 hours of price action, a single hourly candle, bleed out the next 7 hours, and basically we're back where we started. So I could see why it would be concerning at the time and in the moment. But again, think of that overall structure. Even with this rejection, was the overall structure affected whatsoever? On the hourly, no. Our series of higher lows still holding, bottom horizontal still holding. And as you can see, we're compressing below this resistance so much that eventually we get a pop. And that's basically it. That's how I was thinking out that trade. That's why I re-entered into an SNX long after getting stopped out. Let's see here. My take profit 126.6 really wasn't based on fibs or anything like that. This is just me. You know, I figured that we would get some sort of strong pop because of how long we are compressing in this area. So again, this is just me just pulling a target directly from my ass and saying, okay, you know, if we do pop up and have a strong move, I could easily see a, you know, $2.30 move or a 10% move above the previous all-time high because of how bullish SNX is. Sorry, I need to take a drink quickly. My throat is killing. Okay, so yeah, that was my first take profit, not based on fibs or anything. That was just me just, taking the profit where I figured that we would get some sort of strong rejection. Okay, and my second take profit, makes a little bit more sense, and it's just below $30. So we could say that there's going to be some potential psychological resistance at that round number, which there are for some assets, that $10, $5, $1, just stuff like that. So I'll be taking some more profit just below $30 and holding the rest of my position just until some sort of structural change happens. So really the first thing that we should be looking for to potentially get out of this position is that, well, obviously if the daily closes below the previous all-time high, but if we start to see hourlies close below the previous all-time high, that would be pretty concerning, and I would look to get out of this position. If I wouldn't get out of my position there, I would look for potentially, if this series of higher lows is broken, I would look to get out after that. Based on how strongly we broke out, I would really not want us to see below this previous all-time high. But again, I'll take it candle by candle. I'm not going to rush out of this position. I think I have a great entry just below $21, and I truly believe that this could go to $30 and beyond. So we'll see. I'm not going to let that bias cloud my judgment. If I see something that's a little bit spooky, I have no problem closing this position and getting in at a higher price. Anyway, I hope you guys found this video helpful. If you have any further questions, please feel free to ask. Thank you.